You guys, like, honestly, this is such an amazing trade. It really makes up for all the stupid stuff that happened yesterday. So yeah, really nice trade. Congrats to everyone who took it, and congrats to all of you guys who are still holding a runner. I don't know how's the sound right now in here, but I'm pretty sure it's damn noisy. I really think that gold right now has a lot of potential to continue to move lower. I've already secured 90% of my profit, and right now I still have a runner, and yeah, it's just amazing. So right now the runner is at 120 pips of profit. Today's Thursday, so yeah, partially based on divergent, am I right? Someone's asking in the chat. Actually, it was fully based on divergence, on SMT divergence. So divergence plus fair value gap, or rather fair value gap, which was confirmed by an SMT divergence. And the reason why I'm saying this is because the fair value gap, which is the M5 SIBI on the 7:35 a.m. candle, that's the, oh my god, just look at this thing, it just keeps on going. Wow. So 1 to 3 are so far amazing trade. So the 7:35 SIBI on the 5 minutes, which is the basis of taking this setup. Oh my god, it's windy. It's basically, that's the first thing that occurred, right? So we first, like, chronologically speaking, we first had the fair value gap, and then as price was going up to retest it on this piece of price action over here, at the same time, during the same time, silver was also going up. The thing is that silver created a higher high, whereas gold did not create a higher high. So this makes it pretty obvious that the reason why gold was actually going up in here was not to continue to break highs, and therefore create even more higher highs, but it was actually because it was rebalancing this bearish fair value gap that it had created in here. And whenever you see that gold stumbles upon a pre-existing fair value gap, and at the same time silver creates a higher high, that is a very powerful sign of weakness. It's a very powerful sign. Like that SMT is the thing that confirms the validity of that fair value gap that price is tapping into. So I always say, either you're going to have a pre-existing fair value gap, and then you have to wait for an SMT that's going to confirm the validity of the fair value gap and the fact that the fair value gap is going to hold price, you know, above it or below it, in this case below it, since it's a bearish fair value gap. Or you're first going to have an SMT divergence, meaning that gold will be the one that's going to go higher, and then silver will be the one that's going to fail to make a higher high, right? And then gold is going to make a bearish fair value gap. Okay, so the first thing that occurs in this case is the SMT, and then the second thing that occurs is the fair value gap. So in this case, the fair value gap is the one that confirms the validity of the SMT, which would then be interpreted as being a stop hunt. Wow, 150 pip move. Insane. And by the looks of it, like, it's really going down. And I want you to take a look at how like what a perfect manipulation it was, this occurring here at 9:30 open. So if we go to the 30-minute chart, okay, on the 30-minute chart we had a BISI on the 8:30 candle, and if we move on to the 5-minute chart, the BISI on the 30-minute is this one that you see marked here with the blue lines. And I want you to take a look at how 9:30 came, it opened and then went down, pretended to be respecting that fair value gap, and then it just projected, starting to go up. Okay, however, what I really want you to see again is creating another SMT, this time at candle bodies. Okay, this is the reason, seeing this SMT at the bodies, seeing that silver is failing to create like a higher high close or higher high body wise compared to gold. It's the thing that made me not manage my risk when this thing occurred here, and it basically sort of like invalidated this SIBI on the 9:20 candle, which I wrote a little bit earlier on the screen that I didn't want price to invalidate that SIBI, the 9:20 SIBI. It did at this point. Seemed to be respecting the M30 bullish fair value gap, but seeing that silver, even though it was in momentum, right? Momentum from price action, candlestick momentum, but also time, right? So it was 9:30 open, and seeing that it's failing to take advantage of that bullish momentum, and it was failing to create a higher high body like gold. So that's some sort of like a SMT divergence that's not really easy to spot, because we usually focus on divergence at the candle wick level. And in this case, obviously, both pairs created lower highs. But yeah, if I would have seen that the next candle would have continued to go up here on silver, and it would also have created a higher high body like gold did, I would have most likely closed the trade, or my stop loss would have been hit anyway. So yeah. Yeah, so that was a quick breakdown of the trade. Wow, just look at it rejecting right now from June through open, but it's not really some like a rejection in the idea that, yeah, I'm thinking that right now it's going to start to go up, because honestly, I'm not sure it's going to do that. I don't think it will. Anyway, I'm going to keep the runner open. It's just a 0.10. It's like a mini lot. It's not that much. So yeah. I like to see price create a new weekly low, even though I'm not really sure it's going to do that. But anyway, we're going to see. My runner is secured at break even, and I'm pretty much done for the day. It's absolutely no reason to keep to wait for another setup or to look for another setup. Absolutely no reason whatsoever. You've waited for price to close below fair value gap. No, I haven't. My entry is based on a rejection candle that occurs off of a fair value gap. So the rejection candle, the first rejection candle, the first candle that rejected from the fair value gap obviously was this one, okay, the 905. However, if you take a look at silver at the 905 candle, the 905 candle on silver, which is this one, was not a bearish candle. Okay, so keep in mind that you need to have uncorrelated markets. So silver and gold have to be uncorrelated when it comes to like looking for the divergence, and when it comes to entering the trade, you want it to be correlated. So you want to wait for these two to re-correlate, in the idea that if I'm waiting for a bearish candle as a rejection from a fair value gap on gold for me to enter, that bearish candle, which is forming at a certain hour, and I am going to wait for the candle to close, it should also be a bearish candle on silver, and on silver it should reject after taking buy side liquidity above a high. So in this case, I want to see that gold rejects from the SIBI over here, and at the same time is creating a lower high, and that rejection candle, which obviously has to be a bearish candle if we're talking about a bearish setup, has to be synchronized with silver, and at the same hour, that same exact 5-minute candle that closes bearish on gold should also close bearish on silver, and silver must have already been created a higher high, and it should reject from that high that it created. Okay, so in this case, what we can see here is that the rejection candle on gold, the 905 candle, was not a bearish candle on silver, so it's not a proper entry candle. Okay, so then you have to wait for another candle, right? Because you have to wait for a bearish candle to enter that rejects from the fair value gap, and at the same time on silver it's also a bearish candle rejecting from that high that it just took out. So the next candle, 910, it's a bullish candle, so you're not going to go short on a bullish candle. Okay, and then the next candle, so you have to wait one more candle, right? The next candle, which is 915, closes bearish on both pairs. That's the most important aspect. And the SMT is still valid. So for example, if I would have seen that this candle, 915, on gold would have gone up, created a higher high, and then would have turned bearish, I would not have considered that a valid entry, because If gold would go up and create a higher high, just as silver already did, then there is no SMT. Okay, the SMT does not exist anymore. So once the 915 candle closed bearish on gold, making sure that there is still an SMT, that a higher high has not been created on gold, and at the same time I'm seeing a bearish candle closing on silver as a rejection from that high that it just took out. That's your sign to go short. Now in this case, I did not enter once the 915 candle closed because there are multiple reasons. One reason is because it did not create a wick to the downside. Another thing is that because I would have liked for it to have like some sort of a little wick to the downside, it did not. Another reason why I've waited is because I was coming here on the terrace. And then another reason why I didn't take it is because I wanted to see if the next candle is going to continue to move lower, considering that this 915 candle did not create a bottom wick. And so think of it like this is something that I've borrowed from Raja Banks. Whenever you want to go short and the bearish candle doesn't have any wick to the downside, it's like, and it only has a wick to the upside. No wick to the downside means that there could potentially be no other range that the next candle could be filling or it could be going towards, right? And so you might see just a plain support being created, and then the next candle might actually reject. But then seeing that the next candle opens and directly starts to shoot down, then I've said, okay, then it's a good moment to sell, especially because the candle on silver was pretty big, and it was also closing under the previous candle low. So yeah, multiple reasons for which the entry was better like this. Okay, you guys, wow, just look at it rejecting from there. Oh, okay, and look, you can even take it like this just to make sure that the lows are are being correlated perfectly. There you go. Beautiful. Not sure if it's gonna give any entry confirmation whatsoever to go long because it's already shooting up. I mean, it's no point. But I'm happy with today's result. So in total, I've closed. Let me go here. Let me go ahead and check. So my entry was 33, 25, 37. And I've exited with 90% at 33, 16, 50. So it was like 90 pips. Not bad. Not bad at all. Okay guys, you can hear the noisy area I live in, like, but the view, it's absolutely stunning. Let me show you. Wait, just give me a second. I'm gonna take my laptop with me and I'm gonna show you guys how beautiful the view in here is. Look, so beautiful. It's really, really nice. My laptop webcam doesn't have such a good quality, but I guess you get the point. It's really nice. It's really sunny outside. which is the main reason why I actually wanted to trade from here. Anyway, guys, thank you again for being here. Don't forget to vote on the poll. What type, like, I'm gonna be honest, like yesterday it was a really tight battle between option 1, trade small account with my own funds, and option 2, trade prop firm account and take it to first payout. It was a really tough battle yesterday, and today is even tougher because yesterday like the poll ended at, let me go ahead and pull that up real quick. So yesterday the poll ended with 54% of you voted option number 2, prop firm, and 46% of you voted option number 1, trade a small account. Today 53% of you are voting for option 2, prop firm account, and 47 voted for option number 1, trade a small account with own funds. So yeah, if tomorrow's results are going to be tight again, I'm thinking of, coming up with a solution to do both things, like both challenges. I'll see how I can actually accommodate that here on the channel. But yeah, I guess that's it. I guess that is it. Someone asking, what's your target for these shorts on gold? My target, I don't care about any target right now because I have already taken profit a long time ago. And if the runner is going to be taken out at break even, which it might be taken out at break even, I'm not going to give a heck about it. But if I were to say what a medium term target would be, I would say that I would be expecting for this week to create a new low. So I'm thinking yesterday's low, Wednesday's low, which is around here, 32.83, and even all the way down to these relatively equal lows here on the daily chart, which are these two. So 32.45 ish. But for now, I'm done. Day trading means that you have to be done. So yeah. Bye. Talk to you guys tomorrow.